Yeah, hello guys, welcome back to HumbleFx. How are you guys doing? I hope you guys are doing greatly well, trading successfully. How is your trades and all that? Okay, this is HumbleFx signing in. All right, today we are discussing an important strategy that you can use to trade boom and crash, and including all other volatility index, even currency pairs if you are into currency trading. Okay, this is very simple setup, very simple setup, and it works like wonders. All right, this is a crash 500. Okay, and before that, if you are new to this channel, please kindly subscribe to this channel and hit on the bell notification below beside the channel button, so that you get notified once we upload a new video. Okay, we aim to bring to you awesome and strategies that you can use to make the market successfully. Okay, now what do we look at? What are we talking about today? This is also if you want to join our public group, you can check on the video description. You will see a link to our public group, and you can be a member of the group. You get free signals from other members to support each other's. Okay, if you're a learner, you can learn few things from the group and all that. Okay, and if you want any of my paid indicators, you can contact me directly and we'll speak about that. And my smart strategy is still there. Okay, my smart strategy for two candles, perfect two candles, is still right there, and you still have opportunity to grab it now. Okay, kindly check on the video description, and you're going to see a link to my profile. You can send me a message directly and we'll speak on that. Now we'll have a setup today which I called the power of moving average 200. Okay, that is the magic. That's very funny actually. But then it is very awesome. The magic of moving average 200. As you can see on my chart, I have the setup on my chart. Okay, this one here is not among the setup. This is the one we did last time, the powerful strategy. We did it last time. So if you don't have the setup of this one in here, you can check on the video description and you'll see a link to the video, or you can check the previous video and you're going to see the video. Okay, now let us get to work. This is our setup. This is just 2 moving average. This is just moving average. Period is 200, shift is 0, exponential, apply to close. I choose black. You can choose any color of your choice, and you click on done. Okay, and the next one there we'll have the moving average. Period is 50, shift is 0, method is linear weight, apply to close, and style is 3 pixel. I choose gold color. You can choose any color of your choice, then you click on done. Now after that, you have the setup right here. You have this main chart. We are focused on the main chart. The window indicator one you are seeing there is another setup that you can get from the channel. It's already in the channel, so you can get it there. Okay, now how does it work? First of all, moving average is normally used. This moving average 200 actually is called the dynamic support and resistance level. Okay, sometimes I use it for trend lines. It serves many purposes if you know how to use them well. It serves as a resistance, it serves as a support, it serves as trend line, but most especially it is used as a dynamic support and resistance levels to determine the trend of the market and some important reversal zones. Okay, so it's very important. Listen well and get how it works well. Okay, and I bet you make some good profit out of this market. Now this is it. After you have set it, okay, after you have set your moving average like this, then the next thing you are going to be looking out for is your setup. The setup you were using to trade the market. First of all, first setup you are using, this is a 5 minutes time frame. Okay, you can use higher time frame like the 15 minutes time frame. Oh, okay, you can use that, or 30 minutes time frame and above. But I like to use the 5 minute time frame because it will give me early signal and I will take my trade, because I don't normally stay too long in the market. If you want to stay too long, then you go for more higher time frame. But I use the 5 minutes and the 1 minute to trade my market. Okay, for scalping I use 1 minute. For a short swing I use 5 minutes, and that is what you see right now on my chart. Okay, now first, like I told you guys, this is used to show the trend on the market. So now first, this is boom crash index. Now we want to buy or sell. Now if you want to sell the market, want to sell the crash index, first of all what you look for is this: the 200 MA is the black line. That's the black line, is the 200. The gold is the 50. Now first of all, the first signal is the black line. The market price should be crossing below the black line. Okay, that is, the black line should be above the price, which is this. You see it here, it is above the price here. Okay, and that is the first signal. The second signal, the gold line should be crossing below, the black line, which is the linear weighted MA 50 should be crossing the 200 MA downward. Like you see the crossing here. That the third signal is the market should be rejecting. You should wait for the market. You see the spike came over to this point, but you don't just sell because of the market is below the 200 MA. You don't just sell. You have to wait for what is called what is it uh rejection. Okay, rejection. Look at it here. The market move from here, it move up. You want to see the reaction to the MA 200. Actually, look at it here, it came close to the MA 200 and it spiked down. Let me bring it up a bit so you see what I'm saying. The spike, but down, it came near to the 200, the MA 200, which is this black line, and it spiked down. Okay, try to go again and it spiked down. At this point of the two rejections already gotten, you are now known that your trade is going to validate it. You can enter market at the trade, enter market, the sell market there, and you take your stop loss above the 200 MA. Okay, take your stop loss above the 200 EMA, and look at what's happened. It continues to move down. Okay, it's going to move down to this point, which means you should have made some good profits if you have entered the same market right from that second spike. Okay, remember the first one, the 200 moving average should be above the price. One. Second one, the good line should be crossing the black line. Third one, the market should have some rejections reacting near the 200 EMA. Look at a spike happen here. Also you see some rejection here, spike happen. Okay, that is to show you that the market is still going to go down more. That is what confirms it. This is rejection here, rejections in this level. No, the seller is still in control. The buyers want to take over, but the seller said no. Buyer want to take over, seller said no, until finally it spike down more. These rejections here shows that the trend down is still continuous, and you can see enter another position around there, and look at what happened here. Okay, now you make your profits. Now that is for sale in crash 500. All right, now for a buy, look at, if a buy is the opposite, opposite of the what we are talking about. The black line should be below the price. Look at, the black line is this. The price actually crossed it right here. the price crossed it here, but this one did not cross at that point. Okay, now when this one actually crossed over, there was the spike happened and crossed it back. So we want to trade only when there is a rejection, when there is a rejection not below the candles but above the candle. Now look at here, was not a valid trade. Now look at it here. Market come to this place, the moving average 200 is below price. The market went up, spike down to this point. We don't take that trade. The spike was below the 200 MA. We are afraid, we don't know if it will continue going down. Now the market also go up again, spike down. At this point, it's not at the it's not below 200 MA. Now it is near 200 MA. Now we take our trade right from here. When the market when the spike has ended and a new candle is forming, we'll take our trade. And if you take your trade, where is your take profit? Where is your take profit? Your take profit should be the nearest resistance level. If you are buying, it should be the nearest resistance levels, which is at this point. Let me give you a line for that, which is at this point. Okay, you bought from here and you take it to that point. You know that is 1 2 3 4 5 6 candles. It's not, is that is 30-minute candles. Very awesome. Okay, and you could see I entered. Now why did I enter? Why did I enter? Why did I enter this trade? I did not enter at the I did not see this stop is early enough, but I still entered it. Why did I enter it? Rejection. See the rejection share. I got some kind of rejections here. The market spike. Let me zoom it a bit. Okay, market was spiking and going up, trying to go up, came down, and the buyers. This showed me that the buyer are still in control, because the seller did not be able to push the price downward. It's try to buy, the seller come down, buy, seller come down. Now I know that the buyer are more in power, so I have to buy in. My takeoff should be in this zone. Okay, it should be at this next level here, but I will hold for some times. Okay, so this is how we use it. It can be used to trade any indices. If you understand how it works, just know the principle of working. Okay, and if you want to trade on a 1 minute time frame, you have to scalp and be careful enough. To be scalping, you have to be a scalper. Look at it here. Look at what's happened here. Let me show you guys. The 200 MA is here. Price has crossed above the 200 MA. You can take your entry when the price close above the 200 MA, and you scalp the market. Maybe after 2 candles has closed above the 200 MA, you can trade. Okay, and you can wait for the gold line to cross the 200 MA for you to have a verified entry. At this point, you remember you are scalping. You don't need to stay longer in the market. You can take 2-3 candles and you get off the market. Okay, and you see it happens. Look at it here. The market, you see the market cross here, the blue, the gold, and the black cross, and you see the market movement. Okay, so that is how effective it can be. Okay, if you want to get early entry, you could use this setup here. You could see the early entry, the cross below here. You should be riding the market even before the other trade happens. You should enter the market right from here. Okay, so if you want to get this settings here, you can check on the video description, or you check the previous video and you'll get to see it right there. Okay, now that is just it. That's just it. Okay, very simple and easy. Simple setup you can use to trade the market with less fear. Alright guys, this is what it is. Understand it. Please practice that on your demo account. Practice on your demo account and take it to live account after you have finished your practice, and you'll be glad you did, because it will give you some profits that you never expected. The magic of the 200 EMA. That's very awesome. I'll see you guys in the next video. Remember to subscribe to the channel and give us a thumbs up. Also comment on the video, share to your family and friends, and join our group if you wish to follow us up on signals and all that. Thank you so much. Until then, I'll remain HumbleFx. Alright, and hence I wish you guys a lovely day and a peaceful day. Okay guys, that's HumbleFx signing out.